Hey traders, Raghee here. Welcome to Charts and Coffee for May 25. Great to see you all. Happy Tuesday, everybody. So let's go ahead. I'm actually flipping through my many notebooks here. What do we have today? We have a pretty full schedule today. Just a quick heads up. Right after Charts and Coffee, I'll be in the futures room. We'll be trading the open. And then I'll see you all in the options room at 2 o'clock Eastern, right before the close for our ETF and stock option discussion. So great to see everybody. Looking forward to the sessions and seeing you all in the rooms later on. What do we have on the schedule for today? Let's jump on over to the Forex Factory Economic Calendar. Take a look at Tuesday. We've got quite a bit of FOMC speaking, 10 o'clock, right when we have the end of the clearing. We have Corals speaking. We already had Evan speaking this morning at 7:40. And then I think that's it for FOMC. We have some other data coming out, new home sales, which will be interesting to look at in terms of ITB, XHB. And that sets us up for Corals again tomorrow. So we do have these little minor FOMC events sprinkled throughout the week. And so be aware of the time and the volatility that sort of preempts those speaking engagements. All right, so great to see everybody. Happy Tuesday. And the first question to kick off the morning. Hey there, Kyle. What's the difference between volume and open interest? Which do I look at before buying an option? So both. You'll go to the options chain, and usually on the option chain, the columns that I will keep are bid, ask, last. So bid, ask, last. So where are the trades going off between the bid and ask? I'll keep open interest and I'll keep volume. Sometimes I'll keep pop, but not very often. So what I'm looking at for volume. All right, so what is volume? It's how many contracts are traded within a given period. If you're looking at volume on a daily, weekly, whatever the interval is, it's how much volume was traded in that given period. Open interest are the total number of contracts that have yet to be settled. So volume is in many ways a piece of open interest, total number of contracts, and how many of those contracts are being traded within a certain interval. And that's open interest and volume. So you're not going to have volume, especially in the morning if you're putting on an entry. You're not going to have volume necessarily at a large number when the day begins, but your open interest should be liquid enough. And it's really the liquidity that we're talking about when we're discussing open interest and volume. Thanks for the question. All right, next up. All right, sip of coffee. We haven't talked the coffee talk lately. Whether that be the market of coffee or coffee. I'm doing the European, I can't even say it, Eurodraft or Eurograph. It's really good. It's Ethiopian medium. Funny enough, it's that Ethiopian medium blend has gotten very popular because Phil Mickelson, lefty, just won, for you golfing fans out there, just won the PGA Open on Sunday. What was it, a two-stroke? That was a good one. He and Cuppy going into the home stretch. But a lot of people noticed Mickelson looked very different. He's almost 51. He's now the oldest player ever to win a major, which is unbelievable. He's almost 51. Was it 2 or 3 months from 51? And he has his coffee for wellness site, and he's been doing this blend of coffee, sort of reminiscent of, in fairness, to Dave Asprey, sort of concoction with butter, and people have sort of created their own little coffee blends, but yeah, he credits coffee. So it's definitely, I agree with his taste in coffee, that's for sure. And coffee's been moving too. So commodity traders out there, keep an eye on that. All right. So yeah, we're doing the Ethiopian medium roast. All right. So XHB. I'm not interested in XHB right now. I'll keep an eye on XHB, but it's not something that until I can get some greater clarity on the longer end of the yield curve that I'm interested in. MLM, so nice uptrend. I definitely want to find out in terms of doing a deep dive into that comparison, that relative outperformance. But on face value, nice relative outperformer. And FCX, we're long in, so that tells you everything you need to know about Freeport-McMoRan. We bought the dip a few sessions back, so we're already long Freeport-McMoRan, and that's, of course, that market that moves in tandem to copper. So thanks for the questions, John. Next up is, what's my take on MESA? Don't want anything to do with it. Just simple. If you have a more specific question, let me know. But no, I don't have a take on that at all. It's sub $20 in a downtrend. There's so many other names that I might be more interested in. If there's a different narrative, that's a completely different question. But as far as technicals go, thanks but no thanks on that one. Let's see. Good morning, Jonathan. Sharing my losses yesterday made me feel a little bit more normal. You mean, you're talking about when I was sharing the losses on my trade tracker, right? Yeah, I think that it's sort of our job on this side of the microphone to be quite straight up about we lose. I mean, I don't know that that's a news flash, but I kind of detest people that sit where I'm sitting and don't say, yeah, we lose. We just win more than we lose. And here's the cue. If someone doesn't want to talk about their losses, and I probably spend an inordinate amount of time talking about mine because trauma teaches, unfortunately. I learned that early on, but you're going to learn more from your losing trades than you ever will your winning ones. No one ever gets introspective when they're making money. Courtesy 2020, why traders are getting Donkey Konged in 2021. They didn't learn anything. I'm being stereotypical, of course, and broadly discussing most market participants, but 2021, yeah, sadly, when you lose, if you can use that as a teaching moment, then it's definitely going to help. I agree. But more winners and losers, that's the point, right? It's like saying every home run hitter just knocks it out of the park every at bat. We know that's not true. In fact, I don't know if this is still statistically true, but they've often said that home run hitters will also have an inordinate number of strikeouts. You know, a little bit of that balance is worth mentioning. And, traders who don't talk about losses probably have a lot of them. That's what I've learned from also being a student for the better part of 3 decades. My favorite mentors spent a lot of time talking about their goof ups. All right. Corn. I love the trend. And Prabish, again, all my cards on the table, I have an open position. So that, again, should probably tell you everything you need to know. I'm long corn, CORN. That's the ETF. I'm long ZC. So this is one of those cool markets that is applicable to both what I do on the simpler future side of my trading life and also on my sector secrets side of my trading life. So the cool thing is we've got our futures group in on that long. We've got our sector army, in on that long. I love it. I love when we can have, like Freeport-McMoRan and copper. I love those kinds of overlaps. So thanks for the question. All right, next up is any thoughts on EWW, EWZ? I like them both. You're already in EWC. Love it. Yeah, when you look at EWZ, which is Brazil, and you look at EWW, which is Mexico. I mean, the structure is there. They're both on my country lists. I'm pretty sure these are two. I think I just posted the countries that I was interested in sector secrets. I'm trying to remember when we did this, but yeah, I did mention there was a number of countries that I am interested in. I just can't recall, but yes, Mexico and Brazil are definitely two of them, and Canada, love being long Canada. My bigger problem with Canada is going to be we're slowly running out of time left on our options. So the next pullback, I'd like to be able to take advantage of another dip buy. Germany, we've been long Germany for weeks and weeks. And then finally EWU, that's a brand new long position. And, the country ETFs have been performing much better. Look, I see people getting excited about the NASDAQ and things like that, and that's fine. But this inordinate amount of attention paid to FANG, what a waste of time. That's my opinion. There's so many other markets that are moving without the volatility, without the need to reach for the Dramamine every couple of days. These are them. Yeah, they look pretty boring, but I built my career on boring. I didn't build my career on some big move that happened out of congestion or consolidation, which is fine. Everyone's got their style. I just like to grind it out with the trend, let the market do the heavy lifting. And, I think that kind of volatility prematurely ages you. And I want to avoid that at all costs too. So thank you for the question. Thank you for bringing up the country ETFs, because again, there are some fantastic ETFs, liquid, that are giving us opportunities. So I really appreciate the question. Home building today at 8:30, then Thursday. Could there be? Yeah. William, I love that you are using the catalyst of the data to set up what could be maybe another leg higher. I'm not bearish the likes of ITB and XHB. I'm not. What I really need to do, and this kind of goes back to the other question, is make sure that I'm not taking my eye off other parts of the market, other corners of the market, sectors like XLB that look far better than ITB and XHB, sectors like XLP, financials, healthcare. So as long as you've got exposure in the double green relative outperformers, that then frees up some bandwidth to say, all right, I've done what I should do, which is follow the trends. And then I can start to get a little bit more granular about, well, is there a relative outperforming stock within the ITB? And this is where my multi-chart layout, and this is ridiculously simple little layout. It's 12 charts. The big one in the upper left-hand corner is that sort of the tide sector or index. And then I've got the individual heavily weighted stocks listed after them. So if you're looking at ITB, I actually would not look at the tide right now. I'd look at the individual boat, SHW. If I'm looking at XHB, and these are things that I am looking at, gang. So I'm not giving you a for instance. This is, where my attention is right now. So if we run down to XHB, all right, do the same thing. We know that we don't have a double green sector. Is there anything that's a relative outperformer at the stock level? Maybe car, but you can see there, maybe car, maybe Pulte Homes, maybe Fortune Brands. You're talking your 7th, 8th, and 9th heavily weighted stock within XHB. None of them are grabbing me as much as Sherwin-Williams, but that's how I want, maybe even Whirlpool, which looks like it could be compressing, a pre-squeeze environment. So those are pretty good. One thing I do like about those 4 names is they're lower weighted within the XHB. So there's going to be a little less reliance on the XHB rolling higher to get those 4 stocks moving higher, which again, I think the path of least resistance is higher. But when the broader sector loses that double green clarity, you do want to look at where there still is double green clarity and take full advantage of that. And then secondarily, you can start to think about, all right, what are the individual stocks within a sector that I still think has a path of least resistance to the upside, and how can I take advantage of that corner of this narrative that I like? So that's the mechanics of, what you're really getting right there is the pure mechanics of what I do in the Sector Secrets room. And actually, we do that kind of relative outperformance with futures as well. Which futures contracts are we going to focus on within metals, within grains, within meat, within the indices, within the currencies? We still are grouping markets together, and then we're trying to find what's moving with the most clarity, preferably bullish clarity. So thanks for the questions all on those topics. All right, next up is there hello there, Nikolai, how are you? Is there a specific number of names I prefer for natural gas placement? Right now it's UNG. Does it follow NG? Yes, so I'm playing UNG, NG, right? However you want to play that. Or Bob, what's a good way to track it? So I would say this, the natural gas uptrend is relatively fresh in terms of getting above the 200 period exponential moving average, turning into a double green, and we are long natural gas. However, I'd like to see a little bit more maturity in this trend. And then once I get a little bit more maturity, a little bit more of the follow through after this pullback, then I can start thinking about natural gas companies and, Pioneer, Marathon, a lot of the same companies that you would be long in if you're trading with me based on the energy companies generally. They're already pretty strong. So, and you probably already have exposure to them via XLE and things like that if you've been trading along with the trends that I've been focused on. So it's probably not that different. There are certain companies that have more attachment to natural gas than just generally energy, period. But let natural gas itself organize. But chances are, if you've been playing the energy sector, as I've talked about for a while, you've probably already gotten exposure to them. So thank you for the question. Any insight on the high short interest on regional banks? I'd have to get specific to the bank. I still like KRE more than I like IWM. I'm not a big, look, I think high short interest is not, for me, a timing setup. It doesn't mean it's not a setup. High short interest, put call ratios, tick, trend, a lot of these internals, and I'll throw high short interest into an internal conversation. They're very valuable as far as looking at the weather report and knowing if there's a 70% chance of rain. I will dress and equip myself appropriately, right? But it doesn't mean that I know what time it's going to rain. It doesn't mean that I know when it's going to rain at all. So I think that this idea, unless you're tracking these things on a rate of change basis, you have no timing on the day that you happen to stumble across a stock and it happens to have high short interest, and then somehow considering that timing, that's actually not accurate. If you knew what the rate of change was, then you could say, all right, I can see that the rate of change in the short interest was growing. It's peaked. I happen to find it in that transition of a rate of change basis. And now I've got an element of timing associated with what I think a high short interest stock could do, which is oftentimes it'll move higher once it breaks resistance levels and volume levels. So please be careful using certain tools as timing, because I think a lot of times traders think just because they've stumbled upon something and the reading is the way that it is, it's somehow the move is now inevitable, and it's not. So I'll be aware of it generally like I would be a weather report. But if you're in Florida, wait 45 minutes and you're going to have an entirely different climate. So with that being said, I like KRE. It's not where a lot of my focus is going to be, but I like it over IWM. And those of you that joined me, this is now 2 weeks ago, when we were talking about the Russell down in this area as it was moving lower, we got long the Russell on that, but then the name that I recommended most traders take advantage of in that same dip was KRE. Because I think, again, I don't want a Dramamine-inducing trading style. I don't want a Dramamine-inducing P&L, right? I don't mind boring if it's steadily climbing higher. I always think about, and I'm totally dating myself now, I always think about, that Price is Right, that little yodeling game, that one always cracked me up. You guys remember that? The little character would climb up them. I got to find that. I want my P&L to look like that little yodeling dude from Price is Right. All right. Next up, and our last question. Let's see here. I'm in July corn. Somebody asked about corn. Yeah, I'm in July corn right now. And I have some corn ETFs, and I got to bring that up on my toss that are going to expire pretty soon. But again, each pullback gives me an opportunity to rebuy on the dip and then look further out into the calendar. So it's just, in many ways, I'm really reliant. And this is the sort of the burden of a trend follower, being patient enough to wait for pullbacks, and then also being having enough foresight to buy further out into the calendar versus this sort of myopic thing of, well, I'll buy with 3 weeks out. Good luck, because you're buying right in the middle of theta decay, and that theta decay monster is just breathing down your throat. And as the premium value decreases, you better get some momentum to counteract that. I don't want to be in that scenario. So I'll give myself the one thing I don't mind paying for, which is time. All right, gang. And just like that, that is the end of Charts and Coffee for today. I'll see you all tomorrow, same time, same station. Tomorrow, we also have our live trading for the Sector Secrets Mastery, which will be happening right after Charts and Coffee tomorrow. So if you haven't checked that out, check it out at simplertrading.com/sector. All right, gang, be good to each other.